Hey, good morning, everyone. It's Coach Chris coming at you Saturday, July 12th, 2025. And I'm just going to do a little technical analysis and scalping training video here. This is for, I would say, intermediate level traders looking to be more consistent in their trades. Just to give you a little general knowledge of how I've been trading and how it's helped me out be more successful, and some little bits and pieces of information along the way. So what I have up on my screen is the micro NASDAQ futures contract ending September of 2025 for yesterday's price action, which would have been Friday, July 11th. Was a really, really interesting day yesterday. Absolutely amazing day in the amount of range it covered and provided a lot of opportunities to make money. But having said that, if you didn't know what you were doing, it also provided a lot of opportunities to really blow up big time because there was some big moves, lots of change of direction, lots of big bodied candles, which means lots of movement in a very short time. This is a 5-minute chart, and this is the chart that I tend to use both for scalping. Most of my trades last anywhere from a minute to, say, a half hour, usually maximum. Sometimes if there's a big move like this, I will stay in the trade longer. But so 5 minutes. The 1 minute gives you too much noise. There's too. I sometimes scalp on the 1 minute, but for doing a more technical analysis, and I'll also trade on this quite often, I prefer the 5 minute because it gives you less noise and you can see the direction much better overall. So also on this particular chart, I developed a little tool for the opening range. For those of you that don't know, the opening range is the first period of the New York session open. In my case, I use the 15-minute opening range. And I tend not to trade during that first 15 minutes just because a lot of orders are firing off and we don't know which direction. I kind of like to let it settle down a little bit, and very often I will wait even longer than that initial 15 minutes. But what this tool also does is it gives me a range and some levels to begin to establish some important levels to trade off of, and I'm just going to show you real quick. So let me turn these. I had this green line represents the opening range high. The dashed line is the opening range midpoint, and the red line is the opening range low point. So that gets established. This is a 5-minute chart. So there's 3 candles. This was the open for me. Market opens at 8:30 Central Time. Big upper wick. And then you'll notice it reversed down. And so then that becomes the low of the range. And look what happens. We get a wick through it, but then you'll notice this big reversal. Then notice throughout the day. Now, there's a product out there called Edgeful that keeps track of statistics. I don't know exactly how it breaks down, but I believe it's around 80% of the time the opening range will be broken to one side and not the other. Then a certain percent, it can't be, maybe it is 80%, but then another certain time, the trading throughout the day will stay within the opening range, and then a small percentage of the time will get a break above, and then another break below. This is a fairly large opening range. It's 88 points from top to bottom, but you'll notice what happens here. I don't advise taking the initial break out of that opening range. Instead, you want to wait for the retest and then take that second break. And it would be, the opposite price action down below. But you'll get the concept here. And this one, this overall was almost 50 points. this second thrust, because you wait, this is the candle that actually breaks above. So you would enter, say, here, and you pick up 20 points, which leads me to one of the important concepts I want to talk about. We don't need to catch this whole move up. And you shouldn't feel FOMO if you don't. You need to establish a trading plan for yourself that tells you, okay, on average, I want to get 10 points, 20 points, 30 points per trade based on the size that you trade and what your account can handle. So for me, I like to get between 10 and 20 points per trade and trade the equivalent of one mini. A mini is $20 per point. And so if you get 10 points, that's $200, all the way up to 20 is $400 per trade. And you'll see here, this is 88 points of movement in this opening range here. So you can see there's plenty of points available for you to do that multiple times throughout the day. Okay, now the other thing I want to talk about here is what I'm calling the PW pullback. Okay, so we know that the market doesn't move in a straight line. So for instance, we say, well, we're in an uptrend here, correct? Goes from the low all the way up here, probably about 100 and some points. But you'll notice what happens along the way. It doesn't just go up there, green candle, green candle, green candle, green candle. Okay, it goes green, red, green, two red, etc. And that's healthy. That's the way we want to move to make. And so along the way, this thing, we get this big, big green candle, but then we get a red candle. It needs to take a little break. It needs to get some extra liquidity and just take a breath, okay? And then we go up again. And then what happens? We get a pullback, and then we get another thrust. And this will usually happen 2, 3, or more times per leg, what I call upward leg in this case. So I'm calling this the bullish PW pullback. In other words, we're going up. We pull back in the bullish is we pull back in the opposite direction of the current trend. So the current trend is overall up, but you can see here what happens. We pull back and we go lower. And this freaks a lot of people out, this area right here, okay? Because they're thinking, oh, we're going up. Uh-oh, here comes the reversal. And so what will they do? They'll close and they'll immediately go short, only to have this swept. What is actually happening here is there's probably buyers at the top of this, buyers and sellers at the top of this opening range. And so when the price first breaks this, we have the shorts who are selling, they're trapped shorts, and we have people that are going long now that we've hit that level. And so we get kind of a tug of war in this case. And for a while, sellers win, which they will, until everything equals out. And then the buyers, who are clearly in control at this point, take back over and boom. And so the way you trade this is, this comes up. Let me just move this out of the way. This comes up and it starts to come down. And so what we do is we start to draw a trend line. Now that we've established that, it's pulling back in the opposite direction. And you don't want typically just one candle to pull back. You want 2 or more to establish this PW. And then what you want to do is, as soon as this candle here breaks that trend, you can either put it there or put it at the high of this candle. It then breaks and you'll get that continuation. Remember what we're looking for. We're looking for 10. There's 10. There's 20. There's 40 points, okay? Now, the opposite is true on the way to back down. So we get up here, little fight to see if it's going to continue higher, and it doesn't. It reverses on this candle, and now we've established a downtrend, very similar to what happened here, just opposite. So we're coming down. You maybe got in here, or else you're hoping to get in at some point, because we have an important level here, which is the top of the opening range, and we know it's going to react some way at that. Reacted here, it's going to react again, and just it wicks through, but then what happens? It gets rejected. Okay, those are buyers and sellers battling it out. So it's a pullback in the opposite direction of the trend we're involved with. We draw our diagonal line, and boom, when it breaks through, we get involved, looking for 10 to 20 points. There's 12, there's 20, there's 30, there's 40, and there's almost 50. Now, I talked about that opening range before. Here's why these levels are extremely important. Let me take these drawings off so we're not distracted here. Okay, so we've established the high, the midpoint, and the low. So look what happens. We get an initial breakout. We come back, and it almost looks like it's going to retest and go back out, but it doesn't. Look what happens. It closes below, and so technically that is in an inverted opening range trade. So just like this, we broke above. At the close of that candle, we go long. It's the same when we come down. This candle did not actually close below. We went up. This is the first candle to close below. So what we then do is go short here with a target of either the midpoint or the low. And in this case, look where it goes. Almost dead on to that midpoint. Okay. We come back up, retest the high, go back up. But look at how they respected this opening range high. Look at here. This was a really weird candle. This was later in the afternoon at around 2 o'clock. Look at how that wick came almost down to the, and then it reversed up. So, like I said, a lot of opportunity for trading yesterday. I did great. I tended to be on the right side. I think 1 or 2 times I maybe got offside, but the way this was cycling up and down, if you did get offside and you didn't oversize, you usually were able to get out of the trade for a break even or a profit. So, okay, that's the video for today. Take care, everyone.